Manis, I've been a slave to the tick charts all day today. It's almost as if traders really to start the year over the past couple days were waiting for this risk event to really make their moves. And they certainly are doing that. They're really positioning themselves, what we're seeing so far, for a Democrat-led Senate, one where you see more spending, more stimulus, and more deficits. That's when we get this sort of inflationary picture of U.S. 10-year yields piercing through 1%. But really, the pain is in the long bond. I know that 1% is a big psychological level, but really we got to be keeping our eyes on what's happening at the long end of the curve. A pretty steep sell-off here, and that's when we get to that yield curve that hits its steepest since 2016. But also the other election barometer, which we can't ignore, is what's happening in NASDAQ futures. They're off their lows. It was down about 1.4% a couple of hours ago, now down over 1%. I've been talking to traders who said really the fear here is increased capital gains tax as well as more corporate taxes. So if you want to know how traders are positioning, don't just look at the yield curve, look at what's happening at NASDAQ futures as well. But I should say, looking at what's happening in the volatility markets, traders are anticipating that it's not just going to be today, that this is going to be an event that's going to take a couple months to wash out. When we look at the VIX curve, you can see that this right here, this jump is up to a February contract. So this contract also captures January 20th, which of course is around the inauguration. So the fear does seem to be at the moment for positioning that really the stress is in the next month, that we might not get the Georgia results for some time, and that there still will be a bit of a contested election as Trump making different calls to try to position himself here. That might still have an impact on market and more volatility for the weeks to come. Anne-Marie?